Hey everybody, Joshua Phillips here with Churchill Mortgage coming to you with another market update. It is Friday, June the 20th. We are almost halfway through the year as we're fully into summer now, fully into the home buying season, and I hope you're having a great day. Well, before I get into the market update, I just want to highlight, if you don't mind, I'm going to toot our horn just a little bit. This is Amy and I, Amy Phillips, Joshua Phillips, and our son Jesse Phillips as well. As I often say, if you're working with the Phillips at Churchill Mortgage, you're in great hands. And here's some proof. We recently just hit 200 5-star Google reviews. Here it is right here online, 202 Google reviews, 5 stars. We truly do take great care of our customers. We'd love to help you when the time is right with your home purchase or refinance needs. All right, well, let's get into the market update here. So I always like to start on CNBC, and I went ahead and scrolled on down. The article was about the Fed meeting on Wednesday. The Fed, guess what? As usual, the Fed held the Fed fund rate steady, no changes. As you can see here in this article, it talks about how it's affecting different things. It talks about mortgage rates. You can read this quote here. I don't see any major changes coming in the immediate future, meaning that shopping for a home this summer, you should expect rates to remain relatively high. It goes on above that in the article to say that 30-year fix is about 6.91, 15-year fix 6.17. We are seeing a little better rates on 15-year fixed loans, but overall, rates remain fairly high. Let's jump over here to the mortgage-backed security chart now. So, as I often say, mortgage-backed securities are where mortgage rates most derive their values. Mortgages are sold in bundles of securities, and that's what's reflected here. This information is on every professional mortgage loan officer's screen all day, and I'm sharing it with you, kind of getting the inside information on what we look at. Now, all you need to know to really understand this chart is green is good, red is bad, and the higher the security price, the better mortgage rates are doing. That's all you really know. Now, as you're looking at this chart for the last 3 months, I mean, what do you see? You just see a roller coaster. Now, to be honest, this is actually a very gentle roller coaster. We, in the last 60 plus days, have not seen rates change more than about 0.25%. You know, I know it's not sexy, and I'd like to see big moves that I can talk about, but I think the word right now is that rates are steady. Now, reality is, I'll take steady rates over rates jumping a lot higher, which we saw 2-3 years ago when rates were just like jumping consistently higher. I'd love to see rates go lower, but you know what? At least they're pretty reliable and steady, and we kind of know what we're going to get, and I don't necessarily see that changing anytime soon. If we look back here at even a 6-month chart, which basically covers this entire year, probably about maybe a 0.5%, 5/8% change from the highs and lows, from the the best rates we've seen, back in March, and then the worst rates we've seen back in January. I mean, just about a 0.5% change, and then that's just kind of since then, the last 69 days, just kind of flattened out, and rates just are not changing very much. So, now, I will say, just to give you a little bit of technical analysis, that we've been struggling. We're just kind of right in the meat of this, all the moving averages, the 30-day, the 50-day, the 100-day and 200-day, all these moving averages are just right there close together. And we keep trying to bust above the moving average, and in particular the 200-day, which is the top one. If we can get above those moving averages, we actually could see some improvement. So we right now are sitting right on the line of the moving averages, and if we could tick up a little higher, maybe we would see mortgage rates improve, mortgage-backed securities prices improve. We are in a very crazy world right now with not only the tariff stuff still going on, and not only all the craziness in California, just kind of unrest in our own country, but then we got Israel and Iran, and what is Trump going to do, and how's that going to affect everything in the world, from oil prices to just inflation in the economy. So for now, you know what? I'll actually take steady with interest rates while we continue to hope that maybe one day, and I do hope we're going to see rates very slowly decline, maybe if I were to say what's our best case, maybe low sixes on a 30-year fixed by the end of the year. That's what I'm hoping for. And maybe next year, if we're really lucky, maybe we'll see something in the fives. But I have no idea. We could break out in World War III, and I have no idea what rates are going to do. We'll certainly pray that's not the case. Anyway, well, if you have any questions, you want to talk about your specific situation, what rates are available for you, we are certainly here to have those conversations with you. We're always happy to have a conversation and see what we can do to help. If you're looking to refinance, again, you got to hang in there for a while. I just think we're just probably at least 7 months away from even the first opportunity to really see some better rates and see an opportunity to refinance. So hang in there. If you're looking to purchase, it is a good time. It's a great time if you're buying a house. And we're happy to talk with you about that. Have a great day. See you. Bye.